Hello everyone, this is Jordan. This video is being recorded on the afternoon of Friday, April 26, 2024. Thank you so much for tuning in. Hope you all had a great week. In this video, we are going to recap the action in gold and silver and the miners. So let's get right to it. Okay, so starting off here, these are the daily candle charts. Gold at the top, silver in the middle, or at least below gold. And then at the bottom here, we have gold divided by silver. So the gold-silver ratio, I don't know if I mentioned it last week, but, I'm not a huge fan of trend lines. The problem is when a lot of people are drawing trend lines, they kind of force them onto the charts where they just kind of connect random points without carefully looking at the price action. In this case, with this trend line, you can see 1, 2, 3, 4, 5. So when you have this situation, this is a good time to draw a trend line. Like, this is not a forced trend line. So this is, again, gold divided by silver. And so in recent weeks, we're seeing a correction in the sector, just a small correction. And naturally, during a correction, silver will underperform gold. So gold divided by silver here, a little bit of a bounce off this support. Of course, later on, if we get past this correction and the metals are moving higher again, then you have the chance where you could see this ratio go like this and break down. And if and when you see that break down below this trend line, then silver outperforming gold would really begin and accelerate, but not quite there yet. So getting back to just the price action for gold and silver, looking at gold, I mentioned this before, really strong support here around 2,200. There's a gap here at 2,240. Unfortunately, I wish this, we had more action here in this thumbnail. You can see 2290. The 50-day moving average, okay, so that's at 2215. Let's round it up. 2215 and change. So 2216, this is rising sharply. So 2240, that has been a level I've been focused on. There's an open gap, I believe, down to 2240. And then you have the 50-day moving average sloping higher. It's moving higher aggressively. So this is going to continue to move higher aggressively. And the 50-day moving average is important because when you're looking at all the cyclical bull markets in gold, all the major breakouts, when gold is running and it's hot, the corrections come back to the 50-day moving average, and that's it. So, and in the last couple weeks, gold, look how far above the 50-day gold was. So this market was really hot, needed a rest, and still, again, 2216, 2347, right? That's still a lot of room for gold to decline just to test the 50-day. Of course, in the coming days, the 50-day will continue to scream higher. This, the next week or so should get to 2250. So I still think there's a chance where we can see gold, come down like this, possibly, and test, it should find strong support in this area. So that's one scenario. And again, if that is going to happen, you're likely to see silver come back to at least 26.25. Not the greatest candle for silver today. You could interpret these. You could kind of interpret this as like a bear flag for gold and a bear flag for silver. But at the same time, a bull could say, well, look at these ticks here. Gold has tried to come down and close, it's probed these levels in the low 2300s. It hasn't been able to close down there. So we're picking apart the short-term price action, but that to me really isn't the story right now. It's really the miners. So let's look at the miners. So the reason why the miners are the real story right now is you're in a correction for the sector, but the miners are outperforming gold. So remember, we mentioned gold's outperforming silver. Typical in a correction, you would expect the miners to be underperforming during a correction, as they usually do. But that's not the case. Sometimes when you're early in a new cyclical bull market, market's made a breakout, has a lot of momentum, gold maybe corrects. Again, sometimes you see the miners start to outperform. And I remember this happened in the middle of 2009 when gold, of course, you had the late October bottom in precious metals. Gold came down to about $700 an ounce. Then in 4 months, well, it might have been 3.5 months, gold ran up to 1,000 very quickly. Then it consolidated for 4 or 5 months before breaking out September, October. During that consolidation in the spring and the summer, the miners actually moved higher and they made a higher high. So that is not uncommon when you're early in a new bull market. And so we could be seeing that repeat, because look at GDX, GDXJ, and SILJ. These are all basically back to where they peaked. I mean, if you're using, we're looking at in bar, daily bar charts here. So we aren't seeing closing prices, but if you look at closing prices, I know that this is a closing high here. This may be as well, and this may be as well. So what you're seeing in the miners is a lot of relative strength. And I'll just go back here for a sec. You can see, I mean, look at gold and silver. They're still quite a ways off these peaks in a very short-term sense. So again, gold and silver quite a ways off the peaks, but the miners have been able to rally right back to those resistance levels. So the miners are outperforming. The miners are leading. So this is a good omen for the short term. And maybe this tells us that maybe gold and silver are not going to correct that much more. We'll see. Maybe they consolidate at a higher level for another 2 or 3 weeks. That's another possibility. But looking at the miners, I just love the way these charts are setting up. I mean, I don't want to say this is another cup and handle, but we can see here, this is starting to look like a cup. Look. I mean, it's not the most perfect cup, but this is kind of, when you have these rounded formations, these tend to be bullish. And so just looking at the price action, I mean, let's focus on GDXJ. Let's focus on this. It really looks the same in all these charts. I mean, you had this resistance here, and then 3 or 4 weeks ago, you had the breakout here, rose to the next resistance level, and now you came back, retested support a couple times. Now you're moving higher. I mean, it's the same in all these charts. The breakout from this resistance up to this resistance level, and then a retest of resistance. So however this plays out, whether it takes another 2, 3, 4 weeks or 2, 3, 4 days, I mean, I expect the miners will break above these red lines fairly soon. And so, I mean, does this give us, I mean, what is this, 31, 43, 55? So, you look at a measured upside target, that could take GDXJ to here. I mean, it could be even bigger for GDX. You have 38 here, 25 and a half. So what is that? Fifth. So even, you could even get a measured upside target, which is above the 2020 high. So, I'm droning on here, but I really like the way the minor charts are looking. These are bullish. Whether it takes another couple weeks for them to break the red line, or they consolidate for another month or 6 days or whatever, these are setting up bullish. And we're seeing it on Twitter now and other places where people are talking about the miners are terrible, don't buy miners. Yeah, guys, that's really great advice after several years into a bull market for gold and precious metals. Right? That's when miners are really the most dangerous, not when you're coming out of a secular bear market. So I just love to see that sentiment. People have been scarred and beaten down. They hate the miners. They're going higher. They're going a lot higher. That's what the charts and everything is telling me. So, maybe I'll continue that diatribe later. But that's all for this video. Thank you so much for tuning in. Leave a comment below. Let me know what you think. And hope you guys have a great weekend. We'll talk to you again next week. Got a couple of new interviews coming for you next week. Excited about that. Wrapping up the end of the month with Vince Lancy. So excited for that next week. Again, hope you have a great weekend. Thank you so much for tuning in. Talk to you guys again next week.